Short-term loans and advances for bad credit and even good credit. How about 0% interest for 6 to 18 months and up to 150, if not 250,000 without collateral? True no doc, startup and non-startup business friendly. Hi, this is Michael with Viral Funding Solutions, and I'm a business funding expert, or also known as a business loan broker expert, who's been able to help a lot of business owners and their businesses get the right type of financing under the right strategic partnership and roadmap for longer term without over promising and under delivering, without overwhelming you. I'm an introvert at heart, very system and mathematical minded. And having done this for a while and funded my own businesses in the digital marketing agency, lead generation, health affiliate marketing, other verticals there, other ventures, and now this being my primary focus as a business funding expert, I've seen it all. I've been where you are from the very beginning. If you've just been applying everyone anywhere, and if you haven't, great. That's not what you want to do. And have your information then dispersed to other third-party lenders and providers, and then them bombarding you. Are they best for you? Maybe not. A lot of the times they are not. You're searching in the wrong places, going to the wrong direct lender, and then going to an indirect lender in a place that's not going to make sense for you to do it in that specific format, or you're going to the wrong one, and much more. So short-term loans, just know that these come with more medium to higher rates, and the time frame to these, and they're an intermix. If you're looking for alternative financing that is non-banking related, a lot of the times that's what these are. They're called advances. And what are advances? They are based on your future receivables. So you're paying a portion of your sales that you generate in your business back into the lender that provided you the funding. And so you're paying it back with a portion of your future receivables or your future sales. And a lot of the wordage between all of this can be mixed in with a term loan. So that's why you hear these hybrid cash advances, or even there's the traditional merchant cash advances that may be spread out a little bit. But you normally see between 3 to 24, if not 4 to 24 months, and you can hear it as a hybrid advance, hybrid cash advance / term loan. And I like those a lot better than the traditional merchant cash advances, because those can be generally more expensive, and then the way that they deduct, higher sales, lower sales, you get less taken out, or it could be a little bit different in the way that they look at what you're generating in the business. Over here, we call it revenue-based financing, and we can look at everything going into the business. What kind of deposits are you wire transferring? Do you have online transfers? How does that look? Cash, ACH, other deposits, and so forth. And we consider all that, credit and everything, and it can help out in many, many ways. But normally you see 3 to 24 months. They do come with more medium to higher rates, and they're more classified in the alternative space between 1.19 to about 1.69 or 1.55 factor rate, or it's called the total payback as well. So if you get 20,000 and you got a 1.27 factor rate or total payback, you're expected to pay back 27,000 over what term? It could be between 4 to 11 months, 3 to 11 months. At that amount, it could be even more if you have the right underwriting guidelines to get you what you need. And so let's say you were given 8 months at 27,000. Then we would have to work out some numbers that can be for another time. But just know, with short-term loans, whatever you get approved for, is there negotiation power for me to take more? A lot of the times it can be a no. It can be where we gave you an offer of 100,000 and you can select anything underneath up to 100,000, or from 15,000 to 100,000, 16 to 100,000. Or we gave you 4 to 5 offers and we said 100K, 80K, 60, 40, 20, or however it looks. And then you can decide, and I can communicate those with you, myself and or my team. But as a broker myself, I'm able to review documentation very well. I know how to look at cash flow analysis depending on the type of service we're going for. Looking at tax returns and much more that needs to be provided depending on that service. And so you got to hear a little bit about the rates, the term expectations, but more than that, you have to understand, does the benefit exceed your repayment? Whatever loan, whatever advance this is, you have to think about, is it my only option, or is it the option that I want? Oh, I have 2 more. What is the other one? I'll get into in a second. Well, no, this is the one that I only qualify for, or this is what I want, and I'm going to use it based on the performance of my bank statements, as that's what we're looking at. If we're looking at the last 3 months or 4 months in bank statements, sometimes 6 months, we're also looking at a copy of your driver's license and a voided check. And so with that, we're looking at the projections of what you are generating now, and we're making a decision on, and I'll get into that a little bit more. But the benefit has to exceed your repayment. So if you got 20,000 in that example and you're paying back 27,000, okay, can I take 20,000 and generate 30, 40, 50,000? Yeah, I have a couple contracts, I have equipment that I'm adding, and I'm also getting new inventory, but I didn't want to go the traditional equipment financing slash leasing route. Okay, so I wanted to get it on a lump sum. Great. So we got you 20,000, paying back 27,000. To some it might sound or be pretty steep. Yeah, it is to that business owner who doesn't have the right use for that working capital, the right use for that expansion growth. It's just used for payroll. It's not enough going to payroll. But a lot of the times, whatever it is, depending on if it's payroll or not, you have to begin somewhere and build that foundation with that lender. You have to build that relationship with the lender, myself, the underwriters, the team. So that next time when you come back and get more underneath the same lender, or now we move up another tier, or we get you another second or third position or whatever it is, and it has to make sense. That then you go, okay, now I'm eligible for more funding. They can trust you. You haven't defaulted. You haven't gone through these errors. So somebody who uses this money for just repairs knows that it could be expensive money, but it's their only option. What are the other ones? Credit, collateral, business, trade credit, vendor credit, credit cards. Do you have that? Have you been over leveraged on your personal credit? You don't have enough to do things with business credit yet. Or you do, but you don't want to use that. You don't have an introductory 0% APR anymore. That doesn't happen anymore for you. As in, your 0% has been extended, or you couldn't get a 0% to begin with, because that'll end at some point in introductory APR. So then you have to decide, what am I exactly going to use for these projects? How am I going to get the money from where I need to get it? Exactly what I meant by. And will it be enough? And if it isn't enough, I have to start somewhere. I didn't get approved for that 40,000. I got half of that, more or less. Or I wanted 100,000. I only got approved for 20, 30,000. Can I get more? Well, we could try to do creative credit-based financing on top of that lump sum, especially if you didn't get the lump sum on top of a line of credit. So you're kind of going back and forth. And I know the psychology of all of this. I'm a numbers guy. So whenever I get any kind of offer, pre-approval, post-approval, pre-approval, excuse me, I'm looking at it and saying, for one, how can I save? But then two, if it's not cost effective, also, how can I take this money and then use it in the shortest amount of time, pay it back? If I can pay it back early, there are early payment discounts, no prepayment penalty with a lot of these. Great. So I have an expectation to pay all this all back in about 3 months. I was given 7 months to 11 months, 8 months, let's say that, or 15 months, but I'm going to pay this back in about 4 to 8 months, let's say. Great. What are we looking at then? So the benefit exceeds the repayment. There are many examples I can go through. I can say there are contracts, inventory, equipment financing. There are many stories that I have, and without getting into them really in this video for this time, just know that I've come across a lot of business owners who need repairs, who then tell me, hey, I just needed it for a quick repair of injection of 25,000. Whether they got approved for that or not, they can build up and get more. And they go, 90% of my funds need to go into repairs. The rest of it, if I have anything remaining over, I'm going to use for growing and expanding, getting new routes or whatever it is, getting new medical equipment. Okay, I didn't do it all at once at that point, so I'm going to come back and get more addition. Now I have another 90% I'm going to use towards expansion. I used 10% with this one. Now this one's going to be used 90% of it. So you have to be making these rational decisions to eliminate all secondary thoughts on, will this or will this not work? You have to know your numbers. And that's a problem that a lot of business owners run into, is they don't know their numbers, their finances. They don't understand the business math of this, the business math of their own business or businesses, financial structure of it, the operational structure, the product structure. A lot of the times you are the one running everything. I get that. It happens, especially in the very beginning. I've been there, done that. And I want to end it with this. I'll have more information for you down below in the description. There will be a questionnaire form you can fill out to get in touch with yours truly. I will then evaluate it and analyze it and give you a proper response back via email on your best funding option and options. It could be in a longer email. It could be in a PDF format, as I change things from time to time. But I'll show you in a very highly personalized and customized response what your best option and options are, whether you can or can't qualify. At least you will know what not to start with, why you shouldn't just be applying anywhere and everywhere. and how you're getting the best look by doing it this way, detail per detail. Everything you need to know, documents, application, how to get started, what's my next step, how do I submit this. This is going to prepare you, and you'll be able to save this to reuse later on as well. And this is my last point. I've been there. If you're just starting your business, it can be most difficult because there is cash flow, there is credit, there is collateral, there is business credit options. Can you use a combination of them? No, you can't. Yes, you can. Somebody telling you can't. Are they sure? You're hearing it from someone else, so you're going to go and apply. And so there are all of these little issues and beliefs and things that get in the way. And like you, or if you've been here, I was once in the 9 to 5 in my younger 20s. And even before that, going to school, educating myself through the university system, going to school as a Division I soccer player, studying sociology for a little bit. And then I went into chemical engineering. That's how my mind works with numbers and systems. My favorite class being chemistry. Really is my favorite class. Did well in it. That led me into even more of chemical engineering. And then in those classes, in a little bit of time there, I then started seeing the market and how I wanted to start a business and that would best benefit me. So I started getting into business administration and change, and then went there thereafter. Got into working for some time. I worked in construction, manufacturing. I did warehousing. I was even a ramp agent at some point in my younger 20s, believe it or not. And I was working in the fields. I wasn't given a cubicle space. I wasn't in the financial logistics space and all that until later on. So I was in the field, having to drive manual trucks to job sites and loading and unloading, and all these little things to the little space. It was like a manhole sewer rehabilitation space, getting in the sewer holes and doing things like that. And I'm like, what am I doing this for? And I didn't have to do that, but these were things that made me even stronger. And sometimes you have to go through those and what's available, and sometimes you got to get different experiences. And so I did that for a little bit, very high risk industry. And then I got into manufacturing. I come from a manufacturing family. Well, my dad's in manufacturing, the CNC machinist. My uncles, some of them are in construction, and other ones manufacturing. And so having worked with my uncles in the construction space, I had my cousins there too, my cousin. And over here, manufacturing, working as a headerman in the aerospace company, pumping out to tooling from the machine, from the die cast. Learning those lessons and working in the blueprint room there, looking at things and structures, dimensions, and doing all of that. Later on, then getting into financial logistics and servicing HP and Peace Health for one of the biggest contracting companies, the majority of it being HP. But for one of the biggest contracting companies in the financial logistics position, working hard with data, numbers, budgeting, ordering, shipping and inventory, and things like that, shipping and receiving. But also having to lift media up still. So there was a physical component to it, but it was just very light. It wasn't always as busy until sometimes it did. So I thought I'd stick around with it. I'm not a very physically built person. Genetically, I haven't been given those gifts. And so then what ended up happening is I couldn't get paid more, and I was getting paid under, not like under the table. I was getting not paid what I was worth there. I should have been getting paid more. Somebody in front of me didn't want to retire too. That was close to it, but not yet. They didn't want to. They changed their mind. And then the company ended up going down under. At that time, I was already preparing for starting my business and doing things. And I had to go back on unemployment benefits and the food stamps. I felt very embarrassed, me being an introvert, going into a grocery store, making the payments with an EBT card, not even looking the person in the eyes at the register. At times I would, but it was too painful to. And I was thankful. I've always been grateful. I've never been bad. Not that kind of person. Never been cocky. I've always been confident and certain. And I grew up well. And these things just happen. Can happen to anybody. It wasn't by my fault. A lot of people got relieved in that position, and I could have had already something, but that's where I decided I'm going to go and work on this digital marketing agency, affiliate marketing thing. And that's where it started to sprout over time. It didn't happen right away. Not in the first couple of months, not in the first 3 to 4 plus months even, and more. And so that's when I started accumulating more thereafter over time. You start building these things up. You're building the foundation and growing from there. You're starting to learn about different tools, automation software, a lot of things with AI right now, and it extends even more. But having that experience and then having the chance to fund those business with personal credit, business credit, other types of lump sums, and much more, I've learned how to navigate all of this. And I really wanted to join this space eventually to help you not get overwhelmed and felt like, okay, well, this isn't my best option. What is? And just out there in like the space, just floating, wondering if somebody will pull you in and help you out, and somebody who's loyal and versatile and flexible in all of this and has the experience, the resilience, and the capabilities really to help you. And there's more of this too. But that's where it came about. And I really wanted to help people stimulate the economy again. Through them, I was able to, or I've been able to do that. And helping you service your own customers and clientele in your community and really make an impact into the economy, because small businesses are what drive that and much more. So that is enough for me. I hope you got enough value from this. And in these short-term loans slash advances, kind of like a time frame, the rate, the expectations, but the ratio to that is the benefit exceeding the repayment for whatever uses of funds you have, that you really take close care about what those numbers mean, but also the impact that it would have if you had that funding. Like, how much more would it take you into another level? Would it not? Do you have to take a temporary setback for then a comeback, or are you just going to stay stagnant? For those of you taking those medium to higher rates, if you're already going backwards in cash flow, maybe it's profitability, if that advance or loan doesn't have a direct impact just yet, but you maybe feel like it will, or it's coming around that time, you really have to look at the trade-off. What's the opportunity cost of getting this? And if you do have to have a loss or something ends up happening that is not maybe directly correlated to this, then you have to really understand that. And you have to improve the things you need to in the meantime. And I can work with you on all that. It's a personal credit thing. Oh, if I had better personal credit, I would have been given better terms and this and that. Okay, we got to work on this. We got to work on business credit at the same time. We got to work on getting more trade lines. We got to work on this next part. Okay, now we have a FICO SBSS score enough of, we can go do an SBA loan, a bank term loan, a bank line of credit, online bank term loans, online bank lines of credit. All of these little things contribute, and you're really going to see how to get prepared for funding when you're going through your cash flow, your profitability, EBITDA, and all these other things that flow. Then you're really going to get a better understanding by knowing what it takes to get funded. So that's everything from me. Look down below in the description for that questionnaire to begin with and all information, but I would start with the questionnaire. And if you enjoyed this video, please give it a thumbs up, share it with others who you feel will find value from it. It can be a complete stranger, a friend, or a family member. And if you haven't subscribed, please go ahead and do so and click that bell notification icon so you do not miss any future content I'll be coming out with. And I think lastly here, I know there's more content that I can release on short-term loans and advances, a lot more like qualifications. That's not for this video. I'm going to try to leave for you a free document down below. And if not, then look at that questionnaire to begin with. Even if that document is there, you can still begin with the questionnaire, but that'll break it down as well. That's all for now. Take care. Bye.